The collision of the Dahlia in the port of Baltimore, Maryland, that has hit the bridge has sparked quite a challenge. It is not just the challenge of the harbor being closed, it's not now just the challenge of the lives that have been lost or the bridge that no longer exists that is disrupting traffic across the state of Maryland. It is now also the challenge of insurance. I've had the opportunity to speak to many insurance conferences. I've also had the opportunity to invest in insurance companies. I've been able to get an insight into the global world of insurance. And what I have learned out of this disaster that it is going to cost Lloyd's of London about $3 billion, the largest maritime payout ever. This is also going to have a severe disruption because the port of Baltimore is closed. There are a few cargo ships stuck inside who cannot get out. There are a number of car carriers who cannot get in to make deliveries. A number of container ships who cannot make deliveries. Somebody is ensuring this. The bridge has to be rebuilt. Yes, the federal government will step in quickly to rebuild it so that they can get transportation back up. But again, there's going to be claims on the bridge. There's going to be claims on the lives. And how do you put a value to the 6 people who have perished in this disaster? And so the knock-on effect of insurance will be felt in shipping. And the insurance companies have been feeling the implications of the war in the Ukraine. There's been sanctions placed on ships to prevent them from carrying Russian crude oil. And one of the ways they have attacked preventing these ships carrying Russian crude oil is they've said any company who does business with Russia and those ships will not be insured or reinsured because there's multiple tiers. There is the policy, the person who applies for the policy, who then goes to a company who then accepts the premium, but they want to spread their risk. And so they go to multiple reassurers and they put part of their risk onto others so that the pool is spread. So when we have a disaster like we've had now with the Dahlia, it is not just one company that suffers the loss, it's spread across. But the insurance industry is going to continue to face multiple challenges. We've had the wildfires of California, in British Columbia, the wildfires in Europe. We've had floods in certain parts of the world. We have hurricanes that hit the East Coast and the Gulf of Mexico. All along in these places, somebody buys insurance. You cannot get a mortgage for your home without insurance. And now it's becoming harder to find insurance. It's becoming more costly to have insurance. But there's another side of this economic equation. Insurance companies invest that premium. And when they have to make these big payouts, they have less to invest into other opportunities that end up helping to also fuel the economy. As the world changes, the world of insurance will continue to change and everyone will be impacted. It is not just going to be the disaster in Baltimore, it is collective, all the disasters that are happening around the world that is going to not necessarily slow down the economy, but it's going to put restraints and challenges that have to be overcome so that we can continue to do commerce. We are all interconnected, and business is interconnected. It is interconnected to government. And so we've got to be mindful of how do these systems work, and do we have good financial policies? Do we have good financial practices? Do we have good financial ethics in how we shall do things? Insurance is important.